king of Bitcoin to be a part of it with me. And so that's how we put it together. But just when you think about what I'm saying, if I'm right, this is going to be worth 10x where it is today. And that would make it the size of gold. And gold, Julia, in terms of the overall capitalization of liquid assets around the world, at $18 trillion, it's still quite small. It's still quite insignificant. So Bitcoin can get to that number, frankly, without surprising anybody, without having it be a monumental move or monumental monetary crisis anywhere in our society. I said at the beginning of this year, halving cycle's coming in April. Wherever this thing is in April, it'll be 4x that by the end of the cycle.
Bitcoin has been gaining significant traction in recent years, transforming from a niche digital asset to a mainstream financial instrument. At the beginning of 2024, the cryptocurrency's value was poised for another surge, with experts predicting substantial gains. One prominent market analyst, Anthony Scaramucci, forecasted in April, when Bitcoin was around $60,000, that it could reach $170,000 by the end of the cycle. This bullish outlook is driven by a combination of factors, including increased institutional adoption, improved market infrastructure, and the growing possibility of positive regulatory developments that could further fuel investor confidence. The increasing institutional interest in Bitcoin, coupled with its growing acceptance as a store of value, has positioned it as a potential hedge against inflation and financial instability. Additionally, Bitcoin's halving events, which reduce the rate of new coin issuance, have historically contributed to upward price momentum. With the latest halving in April 2024, many analysts, including Anthony Scaramucci, are anticipating that Bitcoin's price will continue its upward trajectory, possibly reaching new all-time highs. Watch clips from Anthony Scaramucci's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So I have Buffett's view of the market long term. You know, I understand that Mr. Buffett is selling stocks now. He's built a cash war chest of $350 billion. If we have a 20 or 30% correction in the market, people will look back at that and say, okay, well, Buffett saw something. He didn't like where asset prices were. He didn't like where the market was priced relative to GDP, relative to forward earnings, relative to book. And so he started shedding some of his assets. He's 93 or 94. He's a very, very smart, brilliant investor. I do like to follow him. So there could be some air pockets ahead for the market. I'm not saying that there isn't, but I have his longer term view of the market, meaning I look at the market right now and it could be expensive on all those metrics, but there's something happening that is transformative. It's very, very different from the dot-com revolution. And so when I was in my mid-30s, like you are today, we had a dot-com revolution. And in 1999, we were told that eyeballs mattered and companies like Yahoo, your old company, were doing very, very well, and they had very hard to justify valuations. And then the market imploded. Those stocks went down 40, 50, 60, 80%. Some of those companies went out of business. But the great companies, like an Amazon, may have gone down 80 or 90%, but look at where it is today. If you had the foresight to just hold on to these positions or to build a position. And so I can't pick the day where the market's going to correct. But it's not a matter of if the market will correct, it's when the market will, because this is the nature of stock markets, this is the nature of cycle. So when I look at AI, is there an AI bubble? Perhaps there is. Is there a bubble in the Mag 7? You know, those 7 great stocks that are all worth $1 trillion plus, and they are heavily, if you cap adjust the S&P 500, they're heavily, 25, 30% of the overall 500. And so would you be concerned about that? I would. But then I look at the monumental amounts of growth, the productivity gains, the age of robotics, the age of therapy, you know, talking about biotechnology. We're moving from chemotherapy to immunotherapy. We're moving from, they're going to take cells out of your body and they're going to make a tumor, and then they're going to put it into an AI chamber, and they're going to develop compounds to hit the cells with. And then the computer is going to say, you know, this person's DNA is sequenced this way. And these drug compounds will eliminate that tumor without causing any overall negative impacts on the patient's body, right? So we're moving from chemotherapy to advances in immunotherapy. It's going to drop the percentage of healthcare the GDP percentage that we spend on healthcare. The robotics are going to improve the way we're delivering goods and services. It's going to lower costs. It's a disinflationary thing. AI is going to, in some ways, hurt certain industries and hurt certain jobs. But every time that's happened, better jobs have come out of it. What happened is because of the proactive suppression of the digital economy, digital assets in the United States by Elizabeth Warren and Gary Gensler, the prices that you're seeing today, in my mind, people say, oh, wow, Bitcoin zoomed up. No, Bitcoin was artificially suppressed by poor regulators, capricious, arbitrary, czarist-like regulators that have now been removed from the system due to the fairness of a democracy, and they're gone. And so now the price is back to where it should have been and could have been in January of 2022. And so I think these prices are actually low. I think these prices are going a lot higher once we get bipartisan clarity on what a security is versus a token. What's the clarity on stablecoin regulation? What are the rules? Okay, will the SEC rescind its lawsuit against Coinbase and Kraken and then provide rules? Well, now all the SEC has done is they're trying to regulate by enforcement, and they're forcing people to spend millions of dollars on legal fees and shoot in the dark trying to get something right.
Anthony Scaramucci envisions a transformative financial future, blending Warren Buffett's long-term stock market philosophy with a bold embrace of innovation. He predicts AI, biotech, and Bitcoin will shape global economies, paralleling the dot-com resurgence where giants like Amazon emerged from ashes. Scaramucci critiques U.S. regulatory suppression of digital assets, championing Bitcoin as a strategic powerhouse akin to new oil, with institutional adoption surging. Forecasting a $150,000 to $300,000 valuation within 5 years, he argues Bitcoin could rival gold's market cap. His message: embrace volatility, think long-term, and harness the power of innovation for unparalleled growth. The future belongs to resilient visionaries. Let's watch more clips from the interview.
I'm still close to a lot of people that talk to President Trump fairly regularly. He tells people that Bitcoin is the new oil. He sees it as a potential strategic reserve issue for the United States. He sees it as something that the United States needs to be a big part of. And so I applaud him for that. I like calling balls and strikes on people. And I think they've done a good job so far of laying out a framework. And the last thing, which I think is also very important, is there are senators like Gillibrand, our senator here, and senators like Schumer, senior senator from New York, that have told people privately, myself included, that they want cryptocurrency, stablecoin clarity in terms of what the legislation is going to look like. And they're hoping to do that in the first year of the next congressional term. So for all those reasons, from a regulatory point of view and from a demand point of view, you'd have to be bullish on this asset class. We're going to own some Bitcoin. The state of Wisconsin, the pension fund said, we're going to own it. They announced a $150 million purchase. I didn't speak to anybody there, but I know how pension fund managers think. If you're not long Bitcoin, you're short Bitcoin. And let me explain why. Because it will eventually be in the pie chart of global tactical asset allocation. So every big pension fund has some gold. Every big pension fund has real estate. They have private equity. They have stocks and bonds. They have other assets. And Bitcoin is going to work its way into that asset mix. And again, maybe it'll only be, Julia, 1 or 2%, but then you'll need to own it, right? Because you're going to be compared when the consultants come in to speak to you or your board comes in to speak to you, they're going to compare your performance to the overall pie chart of tactical asset allocation. And Bitcoin's going to be part of that. And so you got to get long it, because if you're not long it, you're going to be short it. Just when you think about what I'm saying, if I'm right, this is going to be worth 10x where it is today. And that would make it the size of gold. And gold, Julia, in terms of the overall capitalization of liquid assets around the world, at $18 trillion, it's still quite small. It's still quite insignificant. So Bitcoin can get to that number, frankly, without surprising anybody, without having it be a monumental move or monumental monetary crisis anywhere in our society. I bought it at 17. It went to 69. And it went back to 15. But thank God, okay, I had, at least at this point in my career, the patience, the wisdom, the luck, whatever you want to call it, to hold it. And so I held it. And now we're sitting here at 93. I think it's going to go much higher, like 150 to 300 over the next 5 years. Can't pinpoint it, but I think it will. And I want to be a part of it. And I want my clients to be a part. I want my clients to not miss out on this. And I want them to be a part of it with us.
Meanwhile, Bitcoin's latest price action reveals a market grappling with uncertainty as bullish momentum fades. On Thursday, Bitcoin soared to a record high of $103,900 before crashing to $91,100, closing around $97,000, a dramatic range encapsulating 2 weeks of trading. This volatility created a high wave candle, characterized by small bodies and extended wicks, signaling a lack of directional clarity. While bulls drove prices up, sellers countered, leaving the market at a crossroads. This cautionary pattern emerged as Bitcoin failed to sustain levels above the critical $100,000 mark. Analysts warn that overcrowded long positions and a bearish divergence in the Relative Strength Index, RSI, hint at consolidation or a potential bearish shift. If Bitcoin breaches Thursday's range, a clearer trend could emerge, either triggering more selling or reigniting bullish momentum. Adding to the complexity, the premium on December Bitcoin call options has dropped, reflecting tempered bullish sentiment. As traders navigate this uncertainty, the high wave candle serves as a reminder of market fragility at record valuations, urging restraint amidst heightened volatility. Whether this signals a temporary pullback or a deeper correction remains to be seen, but Bitcoin's next moves will be pivotal for market sentiment. As we wrap up, what do you think about Bitcoin's future growth potential? Do you believe it can reach the levels Scaramucci forecasts, or is there too much risk involved? Let us know your thoughts in the comments below, share this video, and don't forget to hit the like button. Thanks for watching, and don't forget to subscribe.